your videos. If you guys don't watch them, if you guys don't watch their video, you lose. Like I was saying, if you look at it, took price 1 8-month candle to make this whole massive move, right? To make this whole massive move, but it's taking price 3 years and 4 months retracement into this imbalance created just to mitigate this tiny 8-month order block I can see right here. So now, what is my expectations? When price retrace and get to that 8 months order block, I am expecting price to make some bullish move to take out these very clean equal highs I am seeing here. It is too clean. Because dollar can be bullish, gold can also decide to be bullish. There's something about gold. It's just a masterpiece of its own. It barely respects many, just few times. But when gold is doing its thing, it's doing its thing. So I'm going to save this 8-month candle. I'm coming, guys. Let me save the chart so I can continue. I wonder how people who come late to class had eventually understand. When I was learning my internship, I don't fail to miss any class. And you know, we understand the whole equal high thing. Equal high is a form of what? Liquidity. It's a very liquidity pool resting above. And price are drawn to where we have liquidity. You know, that's what drive price. Anyway, we have drawn liquidity, we have liquidity. Price are drawn to those zones. So when you see liquidity, you don't need to trade against liquidity. You trade in the direction of what? Liquidity. If you are just joining this class, can you mute yourself? So that's for 8 months candle. Now this is our 6 months. On the 6 month, that 8 month candle is just a bullish order block that has an imbalance. We see the imbalance is still there. That shows you that that imbalance is very what? Valid. The imbalance is showing on the yearly. You know, we saw it on the yearly. We saw it on the yearly. We saw it on the 8 months. Now we are seeing it on the what? 6 months. That shows us, that tells us rather that this imbalance is valid. Now, when we raid high and create a higher high, and also equal high above the high, now price will come and fill internal range liquidity. Don't forget, we still have this. We have that. So this is our 6 month zone. I'm looking at price moving from this range to take the high. If this zone is not holding, then we can have a short-term movement from this area first to create a Judas swing lower high. But definitely this area should hold. And moreover, don't forget, price moving from the 50% of our what? Fair value gap is telling us that that's also a valid move. A valid move. Because 50% is also a means of what? Taking a move from premium or discount range. Fair value gap is among the PDRAs. So 50% is also a way of taking what? Our entry is a means of price for us to take our. It's also an area of interest where you can also place your entry either on the 50% of the fair value gap, complete fill, or the top of the fair value gap. So price bouncing up this 50% is also very valid. You don't need to wait for price to completely fill it. If price is going to completely fill it, it will completely fill it. If price is giving you a move on the lower time frame, whereby thereby it's respecting this 50%, is definitely going to move. That's why you are seeing those buys you had on gold. Now this is our 3 month. I like the 3 month because 3 months is just like the 4 hour of the lower range of the higher time frame. 3 months will give you more structure. What price has been doing quarterly, because 3 months, one candle is a quarter. Now I'm going to remove this going to hide it. Now from the 3 months, we see the equal high is still there, very clean. The imbalance is no longer there. And that 8-month order block we can see is consecutive 3-month candle that joined trading together. Now on the 3 months, we see price is still heading back to this zone. How is price heading back to this zone? Price open high and is closing low. Open high and is closing low. And price is reacting off this word breaker we have here, this 3-month breaker. This is a breaker because this was actually what facilitated this sweep, this high, this push up. This bearish candle was actually what facilitated this push up. So, and you can see that price is reacting off of that breaker. Price is reacting off of this 3-month breaker. Open high and close low. What is open high and close low? Price can open into the previous month to balance the premium range of that month, then start trading down. Or price can open low by trading into the discount of the previous month, balance the previous range of that month, the discount range of that previous month, then trade up. That's why you see price trade down into and move up. Now, when you see us closing here, we have all of this imbalance. You see our price open just exactly and push up continuously. So understand that monthly open, quarterly open is very valid. If your quarterly open is opening high, you may likely have to close low. That is why I'm going to teach you the 20 days IPDA dealing range today. 20-day IPDA dealing range is 20 months, 20 days. Every 20 days, price changes tend to make a swing. Every 20 days, price tend to make a swing. Price can make a 20-day swing, open up and close down, open down and close up. You see the structure, the trend line movement. It makes price action even cleaner and clearer for you. I hope I'm communicating.
Yes, you are.
Now, we are on the monthly of the range. We are on the monthly of the range. And from the monthly perspective, you can see where we have that 8-month order block. We have a bearish candle that has been fully mitigated. What did I say? Fully mitigated. Now, instead of that, we are having a rejection block. We're having a what? A rejection block that mitigates all of this what? Mitigation block right here. All these candles are mitigation block. All these candles are mitigation block. Price retrace back into that zone. Take out the liquidity that is resting inside, deep into discount of all these candles, then push up. So this zone, you can see how we have a clean body candle of this bullish move. That shows that supply was not properly taken out. So that's an unmitigated supply zone. And you see how price is what? Trading down. So this low on the monthly is monthly range liquidity. Anybody that stands on the range of liquidity will be crushed. Anybody that stands on the range of liquidity will be what? Crushed. So if price is not feeling like going up for now and wants to make a Judas swing high, this breaker can help to stop price from pushing excessively high. That's why you see breakers and mitigations, they come last in the PDRAs. Come last in PDRAs. Now, this bearish candle push price up and we are broken below that zone. So on the monthly, we have a market structure shift because this demand zone has been taken out. Can you see that? And what you can see, price is making a retracement into that range. Buy side liquidity has been swept. Internal range liquidity has been what? Also swept. So price is coming back to the this is the zone that facilitated this push to the upside. Now I'm going to make a refinement of this entry. I can see clearly this monthly range. So are you seeing now the chart is cleaner and clearer from the yearly down? It's not strange. It's not strange. So there's no need for people to say, oh, after it gets to some point, I don't understand. I don't understand. It does not connect from higher time frame. It connects from higher time frame, but you need to understand the direction price is pushing to at that time. If you don't understand the direction in terms of liquidity and structure, you will extremely and very much be confused from higher time frame to lower time frame. When you understand structure, you understand draw on liquidity, you understand sponsored candle. You know, all of these are sponsored candles. Now you see the valid means of sponsored candle training. You understand candles that actually causes expansions, as candles that break structure, sponsored moves, you'll be fine. So we can see that we are what? Targeting this monthly range liquidity. There's nothing you can do about it. Try to take this previous month. And what was the previous month? Previous month is September. That's to tell you all them GU, them EU, they are going straight to hell very soon. They are continuing their trend. Market makers will make it look as if they are going on trend reversal. Trend reversal just don't happen. A lot of factors that causes trend reversal. A lot of factors. If those factors are not there yet, court reports, commitment of traders, interest rates, if they are not, there's no value change yet. That trend can continue for the next 20 years, bullish or bearish. After all, trend continues 20 years and is still bearish, 20 years and is still bullish. Nothing happens. So, trend is your friend. So, this is what I'm expecting in terms of the monthly view on gold. So far, hope everybody understood, right?
Yes, please. Yes, ma'am.
Perfectly, ma'am. Perfectly, ma'am.
So I'm going to go to the weekly. No, weekly is even more structural. Now we are reducing our focus into this short range. Now you can see that zone I marked from the 8 months. You know this zone is from the 8 months. I marked it from the 8-month candle. You can see on the weekly, it's showing us something. So from the 8 months, we have an order block that I refined all the way down to the weekly. So any opportunity I get at gold, I am shorting. I have an entry around the breaker, but right now I can also see that that breaker has been mitigated. I can see this zone. So that's the zone you saw that I marked on the other chart. And I told you guys I already did top-down analysis. That's the zone you saw that I marked. Look at the zone here. On the other broker. This is it. Can you see that?
Yes.
That's it. The same eyes, the same thinking. I think when I was doing that chart, it's the same thing. It will not change. It will not change. Now, gold is taking. Gold is following this trend line liquidity path. I hope all of you can see the trend line gold is creating.
Yes.
I don't know if all of you go and train your eyes. You should be able to see trend line easily created with your eyes, even without a trend line. When I see trend line being formed, I see them with my eyes. In fact, my eyes will see them even if I don't put a stick. And we see them creating trend line like that, just know that they are doing it for what? One solemn purpose, for them to have something to trade back into in the future. Nothing else. So what you can see now is a weekly range trend line liquidity. You can see it's a range structure now. Are you not seeing the range structure?
Yes.
Are you not seeing it with
Can
your
see.
eyes?
Can see.
When I told you range structure is trend line liquidity, it's a range structure, but it's liquidity. Are you not seeing it? So that's my weekly view. So on the weekly now, let's focus on a small range. We know that overall we are trading into this weekly BC right here. But we can also see on the smaller view, this week is opening high. Can you see that? It's opening high. We are targeting this low. This week has opened high already. So we're expecting it to trade below. Now inside this is a weekly order block. Now let's see the 3 days if I'm going to get a clean entry on the sell. That's price still respecting the trend line. Now I'm going to go to the daily. Now on the daily, you can see this daily order block, because if you look at it, it's tapping on the trend line, bounce back, tapping. You see are you seeing the trend line liquidity?
Yes.
See the range structure. See the range structure. Just imagine selling all the way from that top of the range. Can you see how many people? Thousands. Now we are at the middle of the range. Price is at the middle of the range. Just at the middle of the range. So now you see that there is more to just making a setup. It's not about just looking for order block. Can you see how we're looking for ranges that are valid? We just don't look for order block. We're looking for liquidity, draw on liquidity. Where is the next thing? So this is the middle of the range. That's where this order block is 50% off this range. I could still do it this way. The same thing. The same thing. So now around this area where I have my weekly order block, we have seen that price has broken this bullish structure, right? So, and we are still not at the bottom of the range. And remember, price is trading down. You see that price has broken this bullish structure.